Sue, that's a pretty big difference in what they were expecting. $2 billion less in revenue in the current quarter.
Yeah, and also slashing their forecast for smartphone production. It is because smartphone processors contain Qualcomm literally around the globe that this is important commentary on the smartphone market fading faster than expected as well. You see the shares down almost 7% after hours. They were down as much as 8.5% at one point. The company planning for a continued decline in the smartphone market, and for that reason, they say fiscal first quarter revenue will be $9.2 billion at $10 billion. As Kathleen said, analysts expected at least $2 billion more, about $12 billion, and that helps explain this sharp drop. Now, on the conference call, Qualcomm said it's coping with the slowdown partly through a hiring freeze. The CFO says hiring is frozen as of now, and they will take more cost-cutting action if needed. It also said the buildup of extra inventory, all those chips, may take 2 quarters to clear. Now, Qualcomm blamed both the macroeconomic environment and the sustained COVID restrictions in China for what it called broad-based weakening across all tiers and regions. 3 months ago, Qualcomm slashed its projections for smartphone shipments. Now it looks like the picture is even more bleak. The phone market will contract in the low double-digit percentage range, they say, and excess inventory will continue to be a drag on orders through the fiscal first quarter, although they do believe that will be the bottom of the inventory glut.
Were there any bright spots, Sue?
There were a few. One of the big bright spots is the company had expected Apple to start using its own homegrown modems in the iPhones next year. In other words, replacing the Qualcomm 5G modems with their own parts. That's no longer going to happen next year, so that is a big piece of positive news. Qualcomm's fiscal fourth quarter revenue came in at $11.4 billion, in line with estimates. Profit also matched, so they were in line. On the conference call, they said the products are not being impacted by China restrictions. And importantly, they see China business expanding, they say, despite new rules. They expect 2023 OPEX, the operating, to be lower than 2022, a little break there. And the CEO said if you take the Apple updates, quote, I would say every premium tier device has Qualcomm content on it. So they still have that good relationship with Apple in terms of the actual product being used, at least for the foreseeable future. They say X out the current environment. They do see the opportunities longer term remaining intact. It is the near term where the headwinds are particularly strong.